48,000 options on Meta, done at 12:02 p.m. today, May 15. It is now 2:42 p.m. And what are these unusual options trying to tell us? Because as you can see from the beginning of the year, Meta has so far, the year-to-date gain has been about 98%, as you can see here, trading at $238.80 now. 98% gain. Will this continue to go up, or is it going to pull back now because of this large gain year to date already? And so in this video, let's get right to analyzing these unusual options and then explain how we are trading Meta based on these unusual options and show you our trades. Okay, so when we look at the options tape and we look at that time period of 12:02, you'll also notice that at 12:02, same time period at the 39-second mark, these 180 strike calls were also placed at the same time as these 48,000. And so when we look at the May 19s, these 180 strike calls, you'll see that it expires in 4 days. And when we look at the 180 strike calls, you'll also see here that the open interest is much greater than the volume here. This 43,000 is much greater than the volume today. So we believe that this is a closing order, that they are selling this to close this 180 strike calls. And they're rolling it out in time. And so you'll see here in the August 18s, they're rolling it out because it's going to expire in 4 days. And now they're taking this 200 strike price position right here. And there it is, 48,000 of them. Open interest is very low, 255. So these definitely are opening, these 48,000. And if we look at how much they paid for this, since they closed this up, now they open this to buy these 200 strike calls. You'll see they paid $4,750. It says $47.50, but you got to multiply by 100 to get the dollar amount. And so times 48,000 of these contracts, this was $228 million, right? That's very, very large value, and definitely a large institutional investor, right? It could even actually be, if we look at the news today, you'll see here that this Meta was upgraded by a institutional investor called Loop Capital, upgraded it to a buy and raised its price target to from 220 to 320. Maybe it's this institutional investor or another one, right? But that amount of money is just, it's institutional level for sure. And obviously if you were to buy the 200 call strikes, that is definitely bullish, because you'll see here when we analyze this trade, you'll see a 200 strike call currently at 238. As we move up in price, this will be profitable because this is above that zero line on the profit loss on the y-axis. And so this is bullish. And based on this, because they paid $4,745 for this, we decided to go with another trade, because this is basically like a stock replacement strategy, where you are buying a very deep in the money call at the 83 delta. So instead of owning the stocks, they prefer to buy deep in the money stocks. to gain some leverage. You'll see here. And so they don't have to pay as much for that amount of deltas if they were to buy the stocks instead. And so if we were to trade this, which we are also, what we are doing instead, since they are bullish, is that we sold the 250 strike calls. You'll see here, this is our position. And so once we sold that one, we then went out to the September 15th, the next expiration cycle out here, and we bought the 245 strike calls here, as you can see here. And so what that does is we created a diagonal spread. This is the strategy. This is a bullish diagonal strategy, as you can see. Let's take this off. And so now we're just looking at our trade. So our trade here is also bullish. It will gain in profit as we move up in price with Meta. We'll also have the benefit of this very large theta that's going to be pushing this purple line up to more maximum profit. As time goes on, this will start to resemble, the purple line will resemble the blue line. Okay, so that's kind of the benefit of our trade here. You'll see based on our Greeks, we have this 1 theta. We also have a positive vega, and that's what we want to have. The reason why we want a positive vega is there is potential for Meta to increase in volatility. If we look at the statistics for today, you'll see that Meta is at only 6% IV percentile, very low. So there is this potential of it increasing in volatility. And so we want to make sure our trade has a positive vega trade. When we look at just the stock replacement strategy with the unusual options, you'll see their Greeks, they also have a very positive vega. However, they have a negative 9 theta. And that is primarily why we wanted to switch to a diagonal where we have a positive theta. There is no decay. And if Meta stays where it is, it will still be profitable and it won't decay. And our break even, most importantly, is over here, right here. And where is this? If we look at it, our break even at expiration is about $231.16 right now. So $231. And when we look at the graph of Meta, where is 231? You'll see here that 231 is about here. This level here, 231, right over this level, it has been the recent support level, right? And so we can sort of draw that price range here. You'll see here, right? So this is the 231 level. So currently, if we zoom in a little bit more, we look at that trade, or we see that this 231 has been a strong support for the, after earnings, this jump up, it has stayed in this range and bouncing it off. And by the way, if you haven't watched our earnings video on Meta where we predicted this rally, make sure to do that. We'll put a link at the top here below and also at the end of the video. If you have info cards turned on, you can see how we actually predicted the Meta jump using unusual options and had a nice profit on that, on the rally after earnings for Meta. Okay, so we are still bullish now based on these 48,000 unusual options rolling to this August date. And we're basically creating a break even here, right? Our break even is right at the support level. And this is why we like this trade that we've developed and set up based on these unusual options. And we can easily create an alert at this $231 level and remind us that maybe we need to close our position so we can reduce any potential losses if it does break down from this level, right? And so we are still going to be bullish, and also at the same time, if it starts to trade in this range and isn't really going up and doesn't break this high, we will still be profitable, because as you can see here, if we stay in this range here, we will be profitable, because as time goes on, this theta is not going to decay. Instead, it is going to increase and give us theta positive, to not have a decay, but a reverse gain on theta, which will actually gain in profit. So this is why we like this trade, because Meta has already gained so much, this 98% already, that we are going to stay cautious, but at the same time, we feel long-term wise, the next 100 days out, Meta is leaning towards more bullishness based on these 48,000 options that were done today by a very large institutional investor